Lululemon just dropped their second quarter earnings report, but in the last 5 days we've seen the stock price plummet about 80 bucks. Is it still a buy? Good afternoon, my name is Trey, getting in touch with you from Japan. Today I wanted to share a little bit with you about Lululemon. Taking a look at the 5-year chart for Lululemon, we see almost tech company-esque growth scaling up, especially in the last kind of couple of years here. The company has grown very, very well, double-digit growth every year since it started in 2003 and went public in 2007. The company is on a tear and it's growing in loyalty, and I think it's safe to expect that they'll keep growing in double digits going into the future coming up here. I've never personally owned Lululemon or even been in a store, but I know it's been blowing up, especially since I left America about 11 years ago. We don't see it much in Japan. It's starting to have a bit of an online presence, but I was like really kind of like, what's the big deal with Lululemon? You know, I checked out their website. I'm like, dude, $88 basketball shorts? I'm used to buying like $4 basketball shorts. And they have like all these cool yoga pants and actually some pretty dope stuff. Apparently the quality is really, really high. And I was kind of like, maybe this company is gonna be competing with like Nike and Adidas type thing. But actually looking into it, it's kind of more like Ferrari level of athletic goods is what it seems like. So we've been seeing this huge growth going on over the years, but in the last 5 days, the stock price has dropped. Take a look at the chart here. The stock price has dropped from almost 400 bucks down to like 320. So I'm kind of like, what's the deal? Did something crazy happen? Was the earnings terrible? What's going on? So let's take a deeper look at it. Going into the background of the business to kind of get a deeper understanding of what's going on with the business and the numbers and whether or not we should invest in it in the first place, I found out that actually it's grown its revenues more than 10,000% in the last 15 years, which not a lot of retail companies can say. But they also have some other interesting kind of characteristics. Number one being that they do have a lot of retail locations, but the average retail store size is only about 3,000 square feet. So they're quite compact. And we'll see why that's good, but we'll also see why that's giving them difficulty towards the end of the video. And another really interesting characteristic of Lululemon is that typically brands like Nike or Adidas will sell to other stores which sell those for them, basically. So you can go to like Target or, you know, Foot Locker or whatever and buy Nike brand stuff or Adidas brand stuff. 91% of Lululemon's products are sold through their own channels, meaning their stores, and increasingly their direct-to-consumer stuff, meaning their website or their app. So only 9% of their sales are done through wholesaling. That's really dope for businesses, especially in apparel, because they get to control the pricing and they also get to control product flow a lot more, and they have basically more control over their product margins and less people telling them what to do. Currently, they have about 506 stores, and as of August 2nd, 492 of them have opened back up from closure from the pandemic. One of the headlines on their second quarter earnings report was that revenues are up 2% over last year, up to about $903 million. Interestingly, we saw earlier in a video I did on Foot Locker, despite all the store closures, there's been a lot of pent-up demand, and then when the stores open back up, people are like overflowing into them to get the shoes or to get whatever item that they've been thinking about getting for the last few months. But not only that, we're also seeing that direct-to-consumer sales are up 155% year over year this year, which is like a really good sign, especially during these pandemic times, but also just in preparing for the future as more and more people are going to be starting to work from home or remotely, and more people, especially older people who are unfamiliar with technologies and things like that, are getting more used to ordering things like apparel online. That was a really big hurdle to ordering apparel online or shoes or things like that, but it seems like that's finally being overcome in a large segment of the population. Though total revenue was up, store net revenues were down 51% compared to the second quarter of 2019, all the way down to $287 million, showing the damage that the pandemic's causing. So that means the remainder of the revenue growth that I mentioned earlier is from the direct-to-consumer sales avenues. It's encouraging to see that Lululemon is staying on top of this shift to direct-to-consumer sales, but we're also starting to see that in really big retail companies like Walmart, as I mentioned in an earlier video, where you can order online and then just go pick it up in the store and be out. You don't have to worry about, being around coughing people or things like that. And that's also growing to become a part of their offerings as well, in-store pickups after ordering online. Interestingly, about a year ago, online sales only made up about 24% of their total revenue, whereas this year, that's jumped all the way up to 61%, which is like a huge jump and actually really, really nice to capitalize on, especially during these tough economic conditions. In the second quarter, they closed the $500 million Mirror acquisition, basically buying a company that gives them even more access to set up in-home exercise programs to reach people exercising at home, which is similar to things like Peloton or things like that. That's a really big landmark for Lululemon because that's their first big acquisition, but it also allows them to start leveraging sales to people who are already in the mindset of working out at home. Management expects that this will help them to continue to grow even more going into the third and fourth quarter, though they did mention that this will negatively affect EPS going into the third and fourth quarter because they paid so much money for the brand. Another really positive note is that they mentioned that they finished this quarter with about $1.2 billion of liquidity on hand. So that basically means, we can survive for a very long time even if we don't sell anything for a little while. And that's always a really, they also had no debt too. Forgot to mention that. No debt, 1.2 billion in liquidity. Super dope for a big apparel company like this, especially one that's very retail based. But I think that shows the management's wisdom in preparing for the future. That's something that not a lot of retail can boast, especially in this climate with the last couple of quarters. So we've seen the stock grow really, really well for many, many years. But at the same time, we're seeing P ratios of like 85-ish. We're seeing price to sales ratios of like 13-ish. These are very optimistic numbers for this market segment. Lululemon is growing and it's doing well and it's going in the right direction. But what ends up happening is that so many people build in all of these expectations so much that the stock price goes crazy. We're starting to see a bit of a pullback on that. And I think we're going to see a little bit more of that going forward in the future here as prices, rather than kind of by default, they go up by 1% every day. It may start shifting to be, the default is settling down 1% or 2% per day. We might start to see these kinds of conditions. I wouldn't be surprised if we see Lulu's stock continue to kind of fade for a little bit. Either way, we're still seeing very high PE ratios. But interesting, man. I've been looking at different analysts' takes on the stock, and there are like a large majority of them that are just like, Lulu is great, buy, outperform, it's gonna keep doing well, it's gonna keep killing it. So like, I can understand why it's overwhelming for the typical retail investor. And we're seeing this premium brand grow. We're seeing acquisitions like Mirror. We're seeing the right shift to more in-home stuff and online sales. These are all really good signs. But there are also some things to consider going forward as well. Number one, going back to that store size. What happens when they're social distancing? They have to limit the number of people going into the store. And with a store like Target or Walmart or Costco or something like that, the number of people getting into the store is huge. But when you only have a 3,000 square foot store, you end up getting these huge lines outside. That might end up impacting their bottom line going into the future. It seems like people don't mind waiting in these lines to be getting into Lululemon because they're so loyal to the company. But it'll be interesting to kind of see what happens as things go forward. That being said, I've heard about some malls starting to open up more recently, so who knows how that will affect things. It's just something to keep on your mind if you're going to be investing. We've been seeing EPS growth over the years. Check it out, 12-month periods ending January 18th, we saw an EPS of 233, and then February 19, 367, and then February 2020, 493. These are like really, really good trajectories and good trends to be seeing, especially considering the recent kind of conditions that we've been in. But I think another thing that we should be watching out for is that as Lululemon starts to transition and boost their men's sales, I think we're probably gonna start running up against more competition from the likes of things like Nike or Adidas or other more premium sports brands. Currently, men's only makes up about 23% of their overall sales, which is more than I thought it would be. But still, if they're trying to increase the revenues in there, they're going to be hitting up against some heavy hitters, some big competition. And it'll be interesting to see how that plays out. It's just another thing to keep in mind if you're thinking about owning this company. Another point for consideration is that 88% of the stocks are owned by institutions. That's not necessarily a bad thing. Looking around on Reddit, I thought it would be a much higher percentage of stocks owned by retail people because there's like so much, buzz about Lululemon, blah, blah, blah kind of thing. But I think 88% is quite high. And sometimes what happens with Wall Street is like everybody loves it and then everybody hates it. And if everybody hates it, all of the funds and indexes and all that stuff are just like, get out, and then the stock price can drop really aggressively. We've seen that a couple of years ago in their stock price, and that could actually be on the horizon. Being said, the way I believe we should be investing is to say, is this a really good company? Is the stock price okay? If so, then we'll probably be good going into the future. Personally, I think the price is still too high. We've seen a big drop in the last few days. I personally am not going to run in and start throwing money at it. But if we saw another big dip, I would feel more comfortable, and I'd be a little bit more excited about getting into it. I'm kind of tech heavy right now. So getting into things that are a little bit more brick and mortar-y or a little bit more tangible would probably help the stability of my portfolio going forward. I did a video the other day on Realty Income. Check it out up here if you want to see more about kind of diversifying your portfolio or thinking about other types of stocks. Realty Income is more geared towards paying you a monthly dividend. So that's something that you can think about if you are quite tech heavy. But yeah, Lululemon, Foot Locker, I did another video on Foot Locker, are companies that you can think about probably going to be doing pretty well going into the future. Foot Locker, I said, watch out going into this quarter because back to school sales will be weaker than they have in previous years. And typically, Foot Locker benefits very much from back to school. I think Lululemon's target market is very different, probably a more mature audience and also probably wealthier audience. And so another thing to consider is that, typically retail doesn't necessarily do super well in these kinds of conditions, but the type of people who have the type of budgets to be shopping at Lululemon are not the kinds of people who are going to be losing their job flipping hamburgers or something like that. We're talking about more upper class people who probably have more job stability, who probably have more kind of disposable income and things like that. So you don't really probably need to worry too much about like massive revenue drops or insane EPS drops or things like that. So all that to say, personally, I'm probably not going to run into Lululemon right now, but I'm not going to hate on you if it has a position in your portfolio. I'm very interested to hear what you think. I'm very interested to hear your thoughts on the stock or even if I missed anything or things like that. And I also wanted to thank you very much for taking your time to watch this video and hear my thoughts. I know there are a lot of YouTube channels out there and you've chosen to watch us. So thank you very much for that. Please hit me up with a comment and a like down below. I'd be very grateful to see that. I'm looking forward to hearing your thoughts on Lululemon and some of the other videos as well. Thank you guys very much. Have a great day. Love you and talk to you soon.